In today's show, analyst says reclaiming 37,500 is Bitcoin's crucial line in the sand. In today's show, I'll be breaking down the latest technical analysis. And as Mikhail van de Poppe points out, when in doubt, zoom out. Bitcoin has seen similar corrections during the 2011 to 2014 cycle and also heavy corrections in the recent cycle. After that, massive new all-time highs. And as Samson Mao points out, hodlers enjoying the weekend because 1 BTC still equals 1 BTC. That's right. If you're currently getting wrecked, that's probably because you're over leveraged on alts and you need more Bitcoin in your life. Also in today's show, Vortex report shows how volatility drove one crypto trading strategy to 280x Bitcoin gains. That's right. This chart produced on May 28th illustrates the results of the Vortex core performance since January 3rd this year when the algorithm went live. And at this time, 1 day later, the ROI on the top strategy is now over 3,000%. I'll be breaking this down for you. Also in today's show, Bitcoin dominant cycle suggests the 2017 crypto rally could repeat. That's right. There's striking similarities, as you can see right here, between 2017 and 2021. I'll be breaking this down for you. Also in today's episode, will crypto competitors surpass Bitcoin? Here's the truth about Bitcoin's dominance, according to MicroStrategy CEO Michael Saylor, who was recently interviewed on CNN in this excellent interview. Quoting him here, Bitcoin is sound money for the world. Everybody gets to participate. It's rules, but there are no rulers. I'll be breaking down the highlights for you. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin, Ethereum, and most of the major altcoins are back in the green and pumping. But where's the Bitcoin price likely to go next? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium Crypto News Alerts every single day, just like this. And before I kick off today's show, today's episode is brought to you by our sponsor, BlockFi, the leading provider of financial products and services for crypto investors. Here's where you can put your crypto to work. They're currently paying out a 5% annual percentage yield on Bitcoin, so you can literally have your Satoshis work for you. They're also paying out a 10% APY on stablecoins, and they have a new product, which is their BlockFi Bitcoin Rewards Visa credit card. It looks so sexy, as you can see right here. Here's how it works. Purchase anything using the card, you'll earn 1.5% back in Bitcoin on every purchase. And for a limited time, you'll earn 3.5% Bitcoin back on all purchases within your first 90 days when you use my referral link in the description right down below. And it gets even better. They ditch the annual fee, truly making this a no-brainer to get on the waiting list and take advantage of this offer and also receive an additional up to $250 crypto bonus with a deposit of $100 or more. Use my link in the description right down below. Once you click it, it'll take you here, and you'll notice the referral code already pre-populated for you to take advantage of this special bonus. So what are you waiting for? Click the link right down below. Let's start stacking those sats and get your Bitcoin Rewards Visa credit card from BlockFi today. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. We have a lot to cover, so let's dive right in. The Bitcoin price continues to limp lower as traders in the US hit the BBQ to enjoy the upcoming Memorial Day holiday on May 31st, and regulated futures and options markets like the CME are closed through the weekend, unlike Bitcoin, which never closes. Data from Cointelegraph Markets Pro and TradingView shows that after a brief attempt for the Bitcoin bulls to rally above 37,000 in the early morning hours on May 29th, the price has tumbled below 34,000 as the support needed for a higher move failed to manifest. However, Bitcoin just started pumping right before I hit the record button here this morning. We're currently up 3.7% for the day, trading just above $36,000. And right here, you're looking at the Bitcoin 4-hour chart. Now let's discuss Ethereum. The price action was nearly identical to that of Bitcoin, with an attempt to break above 2,500, met with stiff resistance that pushed the altcoin's price back down to $2,300. And at this time, it's trading just above $2,400 for Ethereum. Now for Bitcoin, it's 37,500 or bust, according to one top crypto analyst, Philby, co-founder of Decent Trader. Bitcoin's price action is a major source of the market's confusion, as it remains a ways away from the 20-week moving average, which is typically the line between Bitcoin being either in a bull or bear market, and as such remains in a bearish scenario for Bitcoin. So we're only currently about $1,500 away from breaking that that critical line in the sand, which is 37,500 resistance. And right here, you're looking at the Bitcoin 4-hour chart from Decent Trader. Now, the analyst went on to further state that if Bitcoin is able to find solid support in the low 30,000s, the 20-week moving average could turn into a major resistance zone in any attempt to move higher. Quoting Philby right here, a drop lower would likely make the low 20,000s or the 78.6% retracement a likely target. As such, price action over the next week is particularly important. And at this point, according to Philby, it is crucial for Bitcoin to reclaim 37,500 to avoid a retest, a weekly support, and as I pointed out, we're only $1,500 away at this time of this recording. Should Bitcoin manage to stage a rally and break above 40,000, Philby identified the previous support/resistance zone at 45,500 to 46,500 as the next area of resistance that will need to be overcome. And for Ethereum, the line in the sand is at $2,300. That's right, Ether performed slightly better than BTC after it sold off back to the 61.8% retracement as the price was able to bounce back above the 20-week moving average, but ultimately rejected at the critical pivot price of 3,000 as the recovery momentum faded. And right here, you're looking at the Ethereum 4-hour chart brought to you by Decent Trader. And analyst Philby identified 2,300 as an important area of support for Ethereum that would need to be held if the bulls wanted to gather momentum for an attempt to break above the $3,000 level and retest 3,300, with this scenario being highly dependent upon the strength of Bitcoin. And as you can see, Ethereum's currently trading above 2,400. So we just need to maintain this current level. Overall, the analyst expects that Ether will outperform Bitcoin in any upside move and at least match any bearish movement. He shared the following: for now, eyes are on Bitcoin to see if the lows can be held going into the weekend, with particular attention being around the 200-day moving average, which is currently the line in the sand for the bulls. So there you have it. Now checking out the latest from Michael van de Poppe, he shared, when in doubt, zoom out. Bitcoin has seen similar corrections during the 2011 to 2014 cycle and also heavy corrections in the recent cycle after that massive new all-time highs. He's right. Sometimes you just need to zoom out to see where we're truly currently at in the cycle. And as Samson Mao points out, hodlers enjoying the weekend because 1 BTC still equals 1 BTC. So if you got wrecked from this recent correction, that means you're over leveraged on altcoins and you need more of the king of all crypto in your life. That, my friend, is a fact. And before I break down our next story of the day, and I shared this Vortex report, which shows how volatility drove one crypto trading strategy to 280x Bitcoin gains, as well as Bitcoin dominant cycle suggests the 2017 crypto rally could repeat, as well as will crypto competitors surpass Bitcoin. Here's the truth about Bitcoin's dominance, according to Michael Saylor. But first, let's take a quick look at the overall crypto market. We can see Bitcoin up about 3.4%, trading at about $36,000. Ethereum up 1.5%, trading just above $2,400. Chainlink up about 8%, trading just under $29. We have Cardano up almost 15%, trading at $1.66. Binance Coin up 4%, trading at $336. And XRP up 4%, trading at 89 cents. All right, now let's break down our next story of the day. What does a highly volatile asset class offer traders beyond panic and the occasional heart attack? Opportunity. That's right. Nicole Werk of Prosperity Wealth Strategies in Michigan summed it up in Forbes. Market volatility is a normal part of investing and is to be expected in a portfolio. If markets went straight up, then investing would be easy and we all be rich. Also like to point out something that Michael Saylor commonly shares, that volatility equals life force. I much rather have the volatility of Bitcoin with those massive gains over the years versus an asset class with little to no volatility with no impressive gains whatsoever, like fiat trash, which tends to go down over the years due to inflation. And during the decade-long bull market on Wall Street, some participants who should really know better seem to have forgotten this, such as JP Morgan Chase CEO Jamie Dimon, who infamously referred to Bitcoin as a fraud back in 2017 and told the U.S. House of Financial Services Committee this week that my own personal advice is for people to stay away from it. He even threatened to fire his employees for investing into the king of all crypto. And yet, at his own shareholder meeting on May 18th, he said a lot of our clients are asking, can we help them buy or sell cryptocurrency? And we are investing in it as we speak. So there you have it. As he was telling people not to buy it, he was buying it behind the scenes, as most shady FUD puppets do at the end of the day. Now for the million-dollar question, why is the CEO of the largest bank in the United States investing in something such as Bitcoin that he advises the rest of us not to touch? Well, to me, it's a very clear answer. Volatility is at the heart of that argument. It's a classic case of do as I say, not as I do. And Dimon and many like him in traditional financial markets make oodles of money when the markets are choppy. That's right, they could buy the dip, increase their position, and get rich, which is what they do. It's called FUD, fear, uncertainty, and doubt, which is nothing new to the crypto markets. And of course, no markets are choppier than crypto. Over the past few weeks, volatility has returned to the crypto markets, pushing Bitcoin to as low as 30,000, which I personally feel is the bottom, before the king of the digital asset swung back to exceed 40,000 once again, which was short-lived. And altcoins have swung even more dramatically, a phenomenon which has also helped Cointelegraph Markets Pro quantitative algorithm known as the Vortex score to post extraordinary results in an automated live testing. This chart, produced on May 28th, illustrates the results of the Vortex score performance since January 3rd this year, when the algorithm went live. And at this time, one day later, the ROI on the top strategy is now over 3,000%, as you can see right here in this graph. In a score-based testing scenario, the algorithm buys a digital asset when the Vortex score crosses a certain threshold, in example 80, and sells it when it crosses a second threshold, in example 75, without employing fancy rebalancing techniques, but simply dividing the portfolio between all assets that currently require an investment. The algorithm has delivered a return of over 3,000% for its highest performing testing strategy, buying at 80 and selling when the asset crosses 80 again on the way back down. For comparison, Bitcoin has generated returns of just 11.2% since January 3rd, and an evenly weighted basket of the top 100 altcoins has returned 247%. That's right, because altcoins have been outpacing Bitcoin this year, and the only reason the Vortex score can deliver outsized returns like this is because crypto markets are volatile, which presents multiple entry and exit opportunities in a shorter time frame than employed by traders and traditional markets. That's right, volatility equals opportunity at the end of the day. That may be partly a function of the 24/7 nature of crypto trading, but it's also partly because of the risk tolerance of crypto investors is generally agreed to be significantly higher than that of Wall Street CEOs, at least for short-term investing. So while volatility has obvious downsides, including the risk of total and permanent loss, it also has major potential upside for traders who have strong research skills. That's right, so take advantage of the dip, keep accumulating and following the smart money. The only ones selling right now due to the FUD in the market are the retail investors, which are being shaken out, and it's so obvious. I mean, it couldn't be any more crystal clear than it is. Now, before I break down our next story of the day and we discuss the Bitcoin dominance cycle, suggesting the 2017 crypto rally could repeat, as well as will crypto competitors surpass Bitcoin, here's the truth about Bitcoin's dominance according to the MicroStrategy CEO, Michael Saylor. But first, let's take a quick look at the overall crypto market cap, sitting just above 1.5 trillion with 133 billion in volume in the past 24 hours. Current Bitcoin dominance at 43.1%, with the Ethereum dominance at 18% even, and the current Bitcoin market cap just above 671 billion, with the Ethereum market cap just above $280 billion. Now, checking out the top gainers within the top 100, we have Engine Coin, Go ENJ, up 20% for the day and 60% for the week, currently trading at $1.65. Near Protocol up 14%, trading at $3.18. Telcoin up 10%, trading at 2.9 cents. Cardano up about 14%, trading at $1.65. And Curve DAO token up almost 10%, trading at $1.73. Now, checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 10 in extreme fear, which is as low as I've seen it in a very long time, which is a strong buying indicator. Yesterday was an 18 in extreme fear, last week a 14, and last month a 51 neutral. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity. BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. All right, now let's break down our next story of the day. For the purposes of historical comparison, it's worth noting that the pattern of the dominance chart currently looks like much it did during the earlier part of 2017. As you can see, the striking similarities right here on your screen. Now, as the markets have gone into meltdown since May 12th, Bitcoin dominance has fluctuated dramatically, bucking 2021's prevailing trend. Before the sell-off started in earnest, Bitcoin dominance had been falling pretty steadily from around 70% back in January to a low of under 40% by the time of the crash was underway. And at that point, Bitcoin dominance was at its lowest since the summer of 2018. It has since recovered to above 43%. If the same pattern is underway this time around, then the market is likely to be at an equivalent of the summer of 2017, when the alt season was just ramping up and still some months away from Bitcoin's price peak of around 20,000 back in December of 2017. Deja vu all over again, just saying. So what are the likely scenarios for the Bitcoin dominance, and what would it mean for the markets? Let's start by following the money flow. That's right, the money flow is one potential predictor of where the markets could go. The model states that money flows from fiat into Bitcoin Bitcoin, and then down from large caps to the mid caps to the small cap alts before redirecting back to Bitcoin and ultimately back to fiat. This model is interesting because it pretty much sums up what happened in 2017, except that the cycle played out twice as Bitcoin surged towards the end of the year. So if the 2017 scenario repeats itself, the Bitcoin dominance could continue to rise until Bitcoin sees another price peak, then fall as alt season accelerates. Once again, if the cycle repeats, it could still launch the alt markets to stratospheric new heights in 2021, while the performance observed during May may not offer much reassurance in this regard. There's also nothing yet to indicate that Bitcoin and the broader markets won't perform according to the long-term trends. Sam Bankman-Fried, the CEO of Exchange FTX and Alameda Research, shared the following: if we enter a prolonged bear market, I would expect Bitcoin dominance to rise as it did in 2018 to 2019, but the correction we've seen so far isn't enough to trigger that. Now for the big important question: to what extent will the involvement of institutions make a difference to the Bitcoin dominance patterns compared with what was seen back in 2017? Perhaps the most critical difference between institutions and retail investors is that institutions are far more likely to follow prevailing market conditions and go risk off accordingly. Therefore, Bitcoin dominance is rising as investors choose to step away from risk on alts. However, based on the buy and the dip reports, it seems there's no reason to assume that investors are going to go as far as going risk off from crypto itself, at least for now. How low do you feel this Bitcoin dominance will go? Do you feel we hit the low, or do you feel we'll continue to rise? Let me know your thoughts in the comments below. And before I break down our final story of the day, while we're talking about the Bitcoin dominance, will crypto competitors surpass Bitcoin, such as Ethereum? Here's the truth about Bitcoin's dominance according to the MicroStrategy CEO, Michael Saylor. And before I break this down, first I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 800 plus videos right here on my YouTube channel. Also have some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsjust.com. Also be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts every single day, including weekends just like this. You can also find me on Spotify, the home of the Joe Rogan Experience. We just surpassed 500,000 podcast downloads this month, which I'm very grateful for your support. You can also find us on iTunes. You can also follow me on Twitter. My Twitter handle is Crypto News. Yes. And for those of you on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy. To join it, click this link, request to join. I'll be sure to plug you in. And for those of you on Telegram, I do have a private crypto Telegram chat. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. And for those of you on TikTok, be sure to follow me there. All right, now let's break down our final story of the day. MicroStrategy CEO and Bitcoin bull Michael Saylor is outlining whether other digital assets have a chance at usurping Bitcoin as the most dominant crypto in a new CNN interview, which I'll include in the show notes below the video in the description. It's an excellent interview. I highly recommend you watch it. By the way, Saylor says that there's never been an entity in history that has grown as large as Bitcoin and failed. The billionaire adds that Bitcoin is more dominant in its space today than some of the world's biggest technology unicorns were before they rose to prominence. Quoting him from this interview, there's no historic precedent for a network that got to hundreds of billions of dollars that was 50 times bigger than its next best competition ever failing. You could have predicted Google, Facebook, Amazon, Apple as being successful by 2010 because they all had already dominated their markets, but they had a decade of growth ahead of them. Bitcoin is more dominant today than any of those companies were when they started their run. He makes a great point. Saylor also believes that Bitcoin's core technology, the architecture, give it an unbeatable superiority over any other crypto or financial product. Quoting him again here, if what you want to do is save money and give it to your children and your grandchildren, then you need something that's sound, and sound starts with thermodynamically sound. The proof of work architecture is by far the best architecture to design something that will be decentralized and secure and maintain its integrity over long periods of time. Bitcoin is a dominant crypto asset network, and if you want a long duration asset that's going to last for 100 years, you need to completely decentralize it and make it permissionless, and you need to also thermodynamically embed it into the firmament of the world. So the architecture of Bitcoin ensures that it will be embedded into the reality of the laws of physics because it uses energy, and it also ensures that it will be politically supported because there are actually facilities and political jurisdictions that are supported by those governments. And Saylor turned heads earlier in the week when he led the initiative with Tesla CEO FUD puppet Elon Musk to create the Bitcoin Mining Council amid concerns about Bitcoin's energy consumption. The council aims to promote energy usage transparency and accelerate sustainability initiatives worldwide, and involves members of prominent mining companies such as Argo Blockchain, BlockCap, Core Scientific, Galaxy Digital, Hive Blockchain, Hut 8 Mining, Marathon Digital Holdings, and Riot Blockchain. And I'm going to leave you with this quote from Saylor: Bitcoin is sound money for the world. Everybody gets to participate. It's rules, but there are no rulers. That's right, my friend. And to check out this entire interview, check the show notes below the video in the description. Now for a quick recap of what I covered with you right here in today's show. Analyst says reclaiming 37,500 is Bitcoin's crucial line in the sand. Also in today's show, I shared that this Vortex report shows how volatility drove one crypto trading strategy to 280x Bitcoin gains. Also in today's show, we talked about the Bitcoin dominance cycle, suggesting the 2017 crypto rally could repeat. Also in today's show, we discussed will crypto competitors surpass Bitcoin. I shared the truth about Bitcoin's dominance according to MicroStrategy CEO Michael Saylor. So where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right, turn on all notifications to receive daily premium crypto news alerts every single day, including weekends, just like this, and I'll see you on tomorrow's episode. Peace.